Ladies and gentlemen, good morning, good afternoon to all of you. Thank you for joining ACRAA and ACRAA's live webinar on recent developments in the Japanese and the Taiwanese capital markets. My name is Grace Lee, CEO and the President of Taiwan Ratings, and I will be your moderator for this webinar. Before we begin our webinar today, please allow me to remind you of the following. Firstly, this webinar comes with audio and is recorded. Secondly, although the questions will be answered at the end of the two presentations and during the Q&A session, you can submit your questions at any time during this webinar via the Q&A box. Lastly, given the current situation, we are participating in this webinar remotely, as many of you probably are too. Please excuse any unforeseeable technical disruptions during this live session. Now, let me briefly introduce you the two speakers today, and you can find their detailed biography in their individual presentation deck. Mr. Atsushi Masuda, Counselor for International Affairs and the Chief Sustainable Finance Analyst at the Japan Credit Rating Agency. He is concurrently the ACRAA Chairman. And Mr. Andy Chang, Senior Director and Head of Financial Services Ratings at the Taiwan Ratings Corporation. They will first discuss the recent development of the capital market in Japan, and then update you on Taiwanese capital markets. I shall now hand it over to Mr. Atsushi Masuda to kick off today's webinar.
Okay, thank you very much, Grace. And can you hear me?
Yes.
My name is Atsushi Masuda. I'm a counselor of the Japan Credit Rating Agency. But meanwhile, and last year, I'm serving as a chairman of Association of Rating Agency in Asia. And thank you very much for everybody to today's and the opportunity. Particularly, I appreciate your support of Asian Bankers Associations, this opportunity. It's a very good opportunity to talking about the capital market because the security market, bond market, and also bank dominance is my subject. Actually, today's presentation is almost on the mission impossible that the capital market is huge and the issue is huge and the very long history and also that the challenge is huge. So it's a mission impossible to talking about everything within 30 minutes with very short presentations. I'd like to focus to those mainly two issues in my presentations. And the first one is maybe credit rating and also debt market issues and the market structure. Particularly, I will introduce under developments of high yield market in Japan. Then second, and bank dominance and the progress in the reform to facilitate bank security house collaborations. Then moving into the second subject of ESG, just recently that how to cope with the ESG investments in ESG financing is a very hot issue. It's a sea change in the capital market. So this is today's presentations. And first, I'd like to just introduce our rating space. In Japan, it's a unique country where that major big three rating company do not dominate in the market. In Japan, there are two Japanese rating agency, which was established almost 30 years ago. And we have a market share of the 62%. And this one is precisely speaking, Japan has a 3,800 listed companies, out of which maybe 1,000 companies are taking a credit rating. And so 1,000 company of listed company is a rating market, out of which we have a kind of 62%. And our competitor is taking a 63. And the big rating company of United States is taking a small share. when the Japanese company going to the foreign market, they are using a big three. But for domestic market, there is some tendency that they are relied upon domestic rating agency. And we have a lion's share to the financial institution rating, particularly that those markets is very important for us. Because of our shareholder is mainly the financial institutions like a mega bank, some of the regional bank, and the security companies. And those are our shareholders. So we have an advantage to penetrate this market. And this one is our rating distributions. As you see, it's a bell shape of those normal distributions. But this right-hand panel is showing to the some of the United States rating agencies. And as you recognize, and the US rating agency has a kind of a high yield portions is very distributed. We don't have any rated entity in the high yield segments. So there is some sort of structural difference. And I will explain why this sort of differences still exist and what is cause and how our government try to facilitate development of high yield market. This is a first subject of my presentations. This one is a kind of investment criteria that for investors like pension funds, insurance companies, and watching to the some of the bond index. Most important one is a Nomura bond price index. When issuer taking rating better than single A range, they are qualify this index. And when the issuer is taking a part of this price index, maybe that arranger can easily arrange because the demand is very high. So this coverage of this bond price index is at least the single A is necessary. So that's a reason why that the institutional investor is a preference to the investment better than single A. And the Bank of Japan, Central Bank of Japan, is also kind of a criteria to purchase the bond for their operations. This criteria of purchase is triple B minus or better. So that's a reason why that the Japanese markets, from an investor's viewpoints, there is a certain threshold of triple B minus. How this goes to the market structure of debt market in Japan. This is my next focus. And the left panel is a bond understanding amounts of nominal amounts in US dollars, billions. As you see that under this, this one is a financial institution bonds, corporate bonds, and also public bonds, including government securities. And the United States has a 40 trillion. By far, it's the largest market. Second one is just recently that China, PLC, is exceeding to the Japanese market size, 15 trillion. And Japan has a slightly smaller, 13. As you see, gray portion is higher. That in Japanese market, and government security dominating the market. And right-hand panel is showing to the their bond outstanding amount in terms of the GDP. And Japan has more than 230% of GDP of bond understanding. And the United States is almost 200, the UK 200. But China is just 50%, even though nominal amount is now larger than Japanese. They have some room to further expansion of the bond markets. Now, we are watching to the corporate funding of the debt market. And this one is compiled from BIS statistics. BIS has two different statistics. One is corporate bonds. Another one is bank lending statistics. Those the yellow portion is BIS statistic amounts of the bank lending, and the green portion is corporate bonds. As you see, outstanding amounts, nominal amounts of the bond of corporate issued. Maybe China is larger than United States. And in Japan is a 6.5 trillion. It's almost under similar amount of Japanese GDP. Outstanding of corporate funding in terms of the GDP ratio is almost 100%. And that is a reason why that this amount is almost similar. But in that sense, maybe corporate funding is the outstanding amount is not so different, but the composition is different. In the United States, almost under 38% of debt funding is coming from bonds. Compared to that, and Japan and also that China, just only 12%, 30% is coming from bonds. And if you are watching to those European countries, and the situation is not so different from Japanese situations. In that sense, United States is an exceptional case where that the corporate relied upon 40% of their funding for bond the fundraising. So United States has a kind of a culture to assessing of bond issues, and the investor is now accepting of those risks to bond investments. Unfortunately, there is no statistics is available for investor side for corporate bonds understanding. This one is a composition of the public bonds, government securities. And this blue portion is a central bank holding. As you see, that the central bank is now purchasing crazily of those and the bonds, partly because in order to countervailing to the COVID shock, and that they try to ease of monetary. And instead of those expansion of the central bank holding, and the bank holding is squeezed. In that sense, central bank is purchasing the papers held by financial institutions. That is the current situations. This one is a composition of the household assets. Red portion is deposit, equity is a trust, and insurance and pension is those blue portions. As you see, Japan, United States, Euro area, almost under 30%, 35% is insurance and pensions. That's not so different. Difference is a composition of deposit and equities. In Japan, half of the household assets is sitting to the deposit and currencies. In United States, 32% is equity, and the investment trust is 12%. In that sense, half of household assets is sitting equity and trust. That is a difference. Why there is such a difference? And we believe, or maybe our Bankers Association has a viewpoints that the credit yield curve is a little bit in the squeeze and also distorted in the Japanese market. This one is large corporates, SMEs, individual mortgage, and consumer lending. Maybe those credit spreads should be reflecting to the kind of risk elements. So should take this straight line portions. But because of the competitions, because of the bank dominations, because of the public supports and the credit spreads to the SME lending is so compressed. And also individual mortgage is so complex because of those heavy public supports to the mortgage lending. And so in that sense, and the credit yield curve is so distorted. That generates to the bank dominance. This is a comparison between the bank security companies collaborations and the comparison between United States and Japan. For this United States case, when the bank is try to M&A, they try to draw down over commitment lines. And if commitment line is full, bond is issues. And from a bond proceeds, commitment line outstanding is repaid. So in that sense, there should be a kind of a collaboration between bank and the security houses before preparation of the M&A and after the drawing down of commitments on the bond issues. So there's some certain smooth synergy delay is necessary between bank and the security house. For SME financing, once the borrower is borrowing, and they should ready for securitizations. And by doing that, and maybe bank can seek for efficiency because their capital efficiency can increase after securitization. Bank can lend more to the SMEs. So those originations are causing a kind of profitability of banking sector. And both cases of large corporate funding and SME funding, credit rating is necessary. In comparison to those United States model, Japanese model is a little bit segmented and also that are distorted. There is a certain regulations that this bank security house should have a firewall regarding to exchange of informations. And in 1993, there is some reform that the bank can establish affiliated security house. But nevertheless, information exchange about a customer is prohibited. So when that those borrower is seeking for money of M&A, bank can lend. And also this can be switched into the bond issues. But prior to those arrangement, bank staff cannot be coordinated with the security house. So borrower should take a lead of those sort of coordinations. For SME financing case, and there's a very strong support of public financial institutions. Japan financial corporations, I used to work there, and also guarantee associations. For individual prefecture has a kind of public guarantee funds to support of guarantee of SME financing of banks. So those guarantee system is existed. It's a kind of legacy of high growth period of 50s, 60s, and because of those supports to the economic growth and the public support is very strong. For large scale corporates, credit rating is necessary, but those public funds does not require to the credit rating. So this is a kind of a core reason why that we don't carry to the any sort of rating to the this SME supports to Japan Financing Corporation and the credit associations. Outstanding amount is huge, $29 trillion yens and 35. That means 60 trillion yen in total, 600 billion US dollars. That's a 10% of total lending by banks to the SMEs. So maybe those the SME lending is heavily supported by public sector as a legacy of high growth period. Bank dominance and yield curve control monetary policy and legacy of deflations. Those cause a kind of squeezed of compressed credit spread and curves, and that's distorted risk return spectrum, and that's cause insufficient supply to the risk-taking finance, and that's become a source of low investment, and that leads to the low economic growth. So government consider change those nexus to by various policy measures. But in Japanese, and the authority also very knowledgeable, but still quite conservative. It's a kind of operation in a very, very slow manners. It's a quite painful process for taking long time. This is a kind of financial reform in Japan. And they are taking necessary measures like NISA, Nippon Individual Saving Accounts. It's a copy of saving accounts for tax incentive for individual. It's a copy from a United Kingdom model. And the stewardship code, that's a responsible investor principle set by 2014. And the corporate governance code also set by 2015, and changing to those the behavior of institutional investor and also those behavior of corporates. Those aspects is gradually changing, but it's not a panacea to change everything at once. And the current situation of the bank security regulations and the United States is a narrow bank, but there is no firewall regulations. And those countries, UK, Germany, Hong Kong, is a universal banking. So they can do bank business and the security house business simultaneously. Japan, narrow bank, but simultaneously those firewall regulations apply. What is the cause result of those the firewall regulations? For this case is M&A operations. Like one borrower is seeking for M&A, as I explained, that they try to use commitment lines drawdown, then replacement with bond issues. Well, this sort of exchange of information is prohibited. So this group, SMBC and also SMBC Nikko, cannot generate a joint proposal to this customer. This is a problem. And when that foreign bank is coming to the Japanese market, they are a little bit embarrassed because this sort of world standard business model cannot work in the Japanese market. This year, there is a certain reform initiative. Some of the reform wish list is turned in. Prohibition of the information exchange between security and the bank is now proposed to be removed. Home-based rule. One bank staff should be clarified. And do you belong to bank or security house? So joint appointment is prohibited. And the double registration of the sales staff or cross-marketing. This sort of joint activity is totally prohibited. So now they wish to remove this sort of firewall regulations. It's a gradual and also long-term process that this original shape, current shape, narrow bank with certain limitation of the firewall is taking place of 93. But after that, this and the bank equity holding restriction law is enacted. And also corporate governance, corporate law is gradually revealing to the equity holdings and those are appointments of the directors by bank to the those security companies. Those are gradually lifted. So there is a certain change is observed. It's a long-term process, like non-corporate borrowing outstanding is squeezed by half, and the SME without debt is increased from 25% to the 40%. And the commercial bank holding of listed companies' equity is squeezed from 16 to 3%. And those movements is gradually changing to the bank dominance. So that the authority recognize they are changing of those relations. In that sense, maybe a bank has a kind of a great freedom, making a kind of collaboration with the security house and using kind of a dynamic delay between bank lending instrument and the bond markets. But it's quite under gradual and slow paces. Now, my second subject, I have 8 minutes more for ESG issues. Now, and particularly the recent 3 years, there is a dynamic change in the Japanese capital market with a particular focus of ESGs. This change is already occurring in the European market last 10 years. So in that sense, and we are catching up those 10 years. First, and I have to explain this concept of ESG and also kind of impact finance or maybe impact investments. And the ESG is focused to the environment, social, and the governance. So dimension is already defined. This impact, without specifying to the ESG elements, impact is focused the particular impact which may be caused by finance. Finance may deliver to the change, but maybe some of the kind of impact to the society, or maybe impact of the innovations, impact of the policies. And so this impact investment is an investment with focus to the those changes created by a financial instrument. This is a concept of impact investment and also ESG investment. And this impact finance concept is coming from those the United States and Rothschild and the foundations. So it's a kind of a, how can I say, notional approach to how financing is affecting to the society. So this is a kind of a conceptual backing of recent prevailing of ESG finance or impact financing. And in Japan, there are many variants like COVID virus and the variants of the those the financing schemes is rapidly expanding. And the first one is green bonds. Then the social bonds is coming. This sustainable bonds is a kind of a mix of social and also green. And then those are type loan proceeds is specified. And the other type is loan proceeds is unspecified, but how to secure those impact, like a sustainable linked bond, linked loan. This one is linked with a certain performance, like a CO2 reductions, and the 20% target should be attained. And if those target is attained, interest rate, applicable interest rate should be squeezed by maybe 10 basis points of this sort of things. So compared to those green bonds, the loan proceeds is not earmarked for particular use, but those performance is linked with a kind of loan performance, loan conditions. So this is another element is impact financing. This one is linked with one particular impact of SDGs. So this is a wider concept than those green bonds. And just recent, the concept is climate transition finance. And when you are talking about the green bonds, and maybe 80% is focused to the solar and wind generation plants. And so in that sense, usage of bonds is very limited. How large emission industries like a shipping industry or iron industry can transform. So we are focused the kind of a climate transition of those heavy emission industries. And this is a kind of a principle. Green bonds, green loans is a specified use. And unspecified is a sustainable linked bond, sustainable linked loans. Those are performance-based, and as I explained. And in between, transitions finance is this transition finance. Particularly, for example, the shipping industry can shift of those fuel oil to the LNG fuel vessel. LNG is still emitting to the CO2, but much better than bunker oil. So LNG fuel ship can be a transition technology. In the future, maybe we are focused on hydrogen or maybe ammonia, which will not emit of CO2 at all. But this requires long-term technology innovations. So as an intermediary, those LNG ship can be adapted. So this the transition concept has two elements. One is future possible innovations, and another one is maybe time dimension of the transition to the future phase. So those are variants of the green bonds. And many entities is setting international standards, like International Capital Market Association, ICMA, and the Law Market Associations, and also Japanese governments. Maybe they are copying of those original principle of the ICMA, and the slight modifications, but maybe original principle is copying from ICMA. And also the UN Environment Program, UNEP Financial Initiative is coming to the different Bible. And the Climate Bond Initiative, CBI, is using to the different principle. There is a certain consistency among those different Bibles, but those are kind of standard setters. And right now, national authority is now adopting those international standards set by those NGOs. It's not a kind of a regulatory framework, but it's a market-driven standards set by NGOs. In Japanese, green bonds market and the social bond market is rapidly expanding, as we explained, that maybe recent 3 years is jumping. And this one is a track record of JCR sustainable finance evaluations. And we conclude 180 evaluations last 3 years, out of which maybe 120 is green bonds and the social bonds 15, sustainable bonds 17, CBI 2, and the sustainable link bond and the 1, linked loan 18, positive impact finance is 16. And just recently that this one is expanding, and also diversification is going on. Yesterday, I watched my file to the recent figures, and my recent project is accounting to the maybe sequential number of 300. So we are sure that this year our track record is surpassing to the 300. In the world green bond markets, and we have a world share of 7.69%. This one is green bond only. In 2020, world market is quite large, so we are quite busy. And the first one is Sustainalytics, and 37%. ISSEG is 20, and Kikero is maybe 10%. We are proudly that is having a kind of world share of almost 8%. Just recently, Bank of Japan introduced green monetary policy. This one is adopted by July 16 last month. And the operation will start this fiscal year and ending to the 2030. They are purchasing of bonds, green bonds, sustainability linked bonds, and climate transition bonds. And those issuers should be subscribed to the TSFD disclosure requirement. This is a kind of elements. And for this one is portfolios of those operations. And recently that the central bank purchased everything for corona purpose. But on the top of that, and the green operation will start this year. Original term is 1 year, but the limitation on the rollover is no existing. So maybe it can be extended to the 10 years. Facility is expected to continue to the 2031. So in that sense, this is a very good news, and to facilitate of green bond market formulations. And the Japanese Metropolitan government is taking an initiative. Japanese and the international markets and Tokyo should facilitate Tokyo attractiveness as an international marketplace. They try to formulate green financing, green markets in Tokyo. This is a tie-up between Metropolitan and the government, and also the national government. So this is my end of my presentation. Thank you very much.
Thank you, Mr. Matsuda-san. Handy, now it's hand over to you.
Okay, thank you, Grace. Let me put this here. Good morning and good afternoon, everyone. This is Andy Chang. I'm the Senior Director of the Financial Service Ratings in Taiwan Ratings Corporation. So in today, I will spend the next 25 minutes to walk you through the recent development of the Taiwan's capital market, and what is our forward-looking view, because I think over the past few years, the capital market has experienced certain structural change, and following the global initiative of ESG, as well as the low interest rate environment caused by the COVID pandemic. So in terms of the equity market structure, that will be the first part I would like to discuss with everyone. In Taiwan, I think the equity market is more booming than the bond market. The structure is quite organized. We have two main boards, including Taiwan Stock Exchange and Taipei Exchange. The differences among the two exchanges is due to the limitation of the profit record years, the scale in terms of capital and revenue. So the bigger ones, more mature ones will be listed in Taiwan Stock Exchange. And before you can be listed in the stock exchange in Taiwan, the government also create a board for startup and acceleration firms. This pre-board market is only focused for those small startup companies. And these companies, they can raise additional new shares here in the market. However, there is no transaction allowed in this market. So the pre-board market is mainly serviced as the fundraising mechanism for these small startup firms. Then once you're getting bigger and bigger, you can go to the emerging stock board under the Taipei Exchange. In this part, as long as there are 2 securities brokers can recommend you, you can be listed here. Since this year, the regulator tried to promote, some strategic industries in Taiwan, including 5G, AI, fintech, and ESG related. So if the company fits into these strategic focus industries, they can apply to be listed in the either called Taiwan Innovation Board or Pioneer Stock Board. To be listed in this 2 innovation board, you don't need to have a profit record. That's why you can easily to receive additional capital in this market, because we all know for these strategic focus industries, during the initial expansion stage, it is very difficult for them to turn profitable. However, to protect the investors, the market participant of this innovation board can only be professional investors. So I think in a nutshell, I think the Taiwan's equity market has a very organized multi-platform and can satisfy the needs for the different stage of a company's corporate operating cycle. First of all, let's take a quick snapshot of the overall equity market. I think compared with the Taiwan 2020 GDP of US dollar 669 billion, the market cap for Taiwan Stock Exchange is over 200%. So I think the equity market part in terms of this market value is quite satisfactory, even compared with some international stock exchange. However, on the other hand, the debt market is a little bit more sluggish. I think earlier Masuda-san mentioned that in Tokyo and even like US, the debt market is about 200% of the GDP. But I think in Taiwan, you can see here the total outstanding debt amount is even less than the Taiwan's GDP amount. So the debt market is momentum is quite slow over the past decades, and we expect this is unlikely to change in the coming years. Why is that? We will discuss further. So if we focus on the equity market first, we mentioned earlier, of course, Taiwan is a much smaller economic body. So in terms of the number of listed companies or market cap, Taiwan is smaller compared with some other leading countries. However, measured by market cap over GDP, Taiwan is quite comparable to those leading stock exchanges, except Hong Kong, given its role of a financial center. The market turnover as well as the PE ratio in Taiwan is also quite comparable to other leading markets. So I think in Taiwan, the equity market is quite energetic. If we take a view of a longer term period, we can observe that the market cap of Taiwan's equity market continue to increase, and the listed companies also on the same growth trend. However, over the past 15 years, the investor part of the equity market has experienced some structural changes. Historically, I think when Taiwan's equity market is more, famous for aggressive trading with a very high market turnover, retail investors was the key market participants. But I think, as time goes by, the market is getting more and more matured. We observe that, the institutional investors gradually gaining more market share of the total transaction volume. In year 2016, actually, those institutional investors accounted for almost half of the market turnover. We believe this is a representatives of the markets getting more rationalized. However, I think retail investors gradually increase their market share again. Why is that? In year 2017, the government lowered the transaction tax rate from 0.3% from 0.15%. So you can see this is a 50% discount. And this encouraged many of the retail investors moving back to the market in the form of day tradings. So we can see, the percentage of the day trading in Taiwan has increased quite significantly since year 2017 and reached over 25%. This situation even deteriorated. I think in June this year, the day trading volume has been over 40% of the daily market transaction volume. We consider this as a little bit, red flag for the equity market, because these are the investors. They expect to realize the market capital gains or loss without a solid capital put into the market. So we observe this is a quite serious situation. We know that the sales agents of securities brokers will chase over some retail investors after the market is closed, because in Taiwan right now, the settlement amount will be completed in T+2. That means if you buy a stock today, you only need to put the money into your account in 2 days. So this window period will rise the potential default of the retail investors in terms of particularly for those day trading players. However, despite the retail investors has gaining more market share in terms of the market turnover, we understand that the comforting factor is by market cap. Actually, foreign institutional investors still continue to increase their shares. We can see that even after 2017, despite the trading volume has increased, the market cap owned by the foreign institutional investors has continued to increase to be over 40%. And the key reason is because I think Taiwan has a quite competitive high-tech companies, particularly in some sectors like semiconductor and certain technology in manufacturing companies. So this competitiveness will attract the interest of the global loan funds. At the same time, in general, Taiwan corporates, for those listed companies, these blue chips provide a very stable and satisfactory cash dividend yield. This also provides another angle of a holding period incentive for those institutional investors. Lastly, we observe, in the recent 2 years, the NT dollars has continued its appreciation trend. This also provides some incentive for foreign institutional investors, because when they purchase the stocks, even the market value remains the same, they can still enjoy some appreciation, benefiting from the stronger NT dollar appreciation. Another comforting factor for the Taiwan's equity market is that the investors are getting more and more welcome to these passive investments. When the market is go back to 20, 30 years again, I think people are chasing over some hot stocks. Imagine they can realize the capital gain in a short period of time. But I think the launch of ETF has gaining more and more interest from the local, not only the institutional investors, but the retail investors to participate in this ETF transaction. So we see the ETF value has increased quite significantly. On the other hand, the derivative and warrants issuance has been still remain quite sluggish, because the tax rate on the hedging treatment is still quite unsatisfactory in the local markets. So we believe there's still road to go for Taiwan to be more famous and more vigorous for those derivative trading. Lastly, if we look at the listed companies, I think the Taiwan Stock Exchange we mentioned earlier is for those more established companies, and the sector is quite diversified. We see here the non-tech sector is contributing about half of the total listed companies, while the rest is evenly distributed among financial, biotech, and various tech subsectors. However, if we go to a Taipei exchange and the emerging market, we see biotech companies and high-tech companies is taking a much more shares, while the non-tech companies is actually less than 30% of the total listed companies. So I think this provides a quick snapshot of the local equity market. Then let's move to the bond market. We mentioned earlier in Taiwan, the bond market is quite sluggish in terms of the issuance amount as well as the transaction volume. However, if we look at the bond market structure, to be frank, it is quite already well developed. We have various participants as the bond issuers, including governments, FI corporates, and even foreign corporates can issue both NT dollar and non-NT dollar bonds in Taiwan. We also have for a corporate, they can issue various bonds, including straight bond, CB, exchangeable bonds. So I think the bond market structure is actually quite organized. And why the bond market is quite sluggish. Here provides you a quick snapshot regarding the different mix of the Taiwan's bond market. If we measure by the total outstanding amount, I think very similar to Japan. Government bond is still taking a lion's share with significant contributions. The rest is followed by FI debenture and corporate bonds. One thing is getting more and more popular are those international bonds, which has been the growth drivers for the domestic bond market. And the ESG related bonds is getting more and more popular in recent 2 years. So here, I think it is also very clear if we look at the chart. If we look at the past 20 years, the total outstanding issuance for the government bond, corporate bond, or even FI debentures actually didn't increase quite a lot. It remained at the similar size over the past 2 decades. The key growth driver for the domestic bond market is actually the international bonds. And the reason is because in Taiwan, life insurance companies, they have a certain limit on overseas investments. And given the bond yield in Taiwan is extremely low, they cannot cover the liability costs of the domestic life insurance companies. So the Taiwan-based life insurance companies, they are keen to invest overseas bond for a better investment yield. As a result, the regulator has set aside an up limit for overseas investments. In order to promote the domestic bond market, I think in year 2013 and 14, the regulator allowed life insurance companies to open the door to put more money on the international bonds. That is the foreign institution, the foreign issuers to issue the US dollar bond in Taiwan. And if a life insurance companies invest in these international bonds, they can be excluded from the overseas investment limit. This actually, provide a very strong catalyst and incentive for life insurance companies to invest in the local international bonds and attract many global companies as well as FIs and even sovereign to issue international bond in Taiwan. That's why the growth driver has become focused on the international bond market. If we focus on the international bond market only, we can see that the US dollar bond remains the key issue currency, given the demand for the local life insurance companies. However, the growth momentum for the international bond has started to decrease slightly in the past 4 or 5 years. This is because the regulator observed for the international bonds, there has brought life insurance companies reinvestment risks. The reason is because for these international bonds, despite the duration is very long, they always embedded with the early redemption call options. And the call options has been quite short, some of which just 1 to 2 years. As a result, the regulator set aside a minimum 5-year call option. At the same time, if you invest in international bonds, you don't have to hedge. This also brings lifers to expose to foreign exchange risks. As a result, the regulator set aside another up limit for international bond investments. Then this actually, discourage life insurance company to put additional bonds in the international bond market. At the same time, some of the international issuers also redeem their bonds before maturities. The situation starts to change in year 2020. Two key reasons. First of all, because globally of the very lower interest rate environment, many international players want to tap the low interest rate opportunity to issue long-term bonds in Taiwan. Secondly, for some of the early redeemed bonds, the issuers also have the incentive to reissue additional bonds in Taiwan, and lifers can utilize the redeem amount to purchase the new issuance without exceeding the limit of the international bond investments. So we see the international bond regain momentum in this year, but this is unlikely to see another significant increase in coming few years, given most life insurance companies already closed their investment limits for international bonds. If we look at the tenor, I think most of the international bonds are still within a very long tenor with over 10 years. As I mentioned, there is always a call options embedded. At the same time, US dollar currency dominates the international bonds issuance. And why international bond market in Taiwan is quite popular, I think this chart can provide some potential answer behind. This is the credit spread for the international bond in Taiwan. I think while the credit spread is not very widened, however, this is already much better than the domestic bonds credit spread. So different ratings will have a different credit spreads, but if we measure for companies with the AA+ ratings in Taiwan, the credit spreads for US dollar bond is just 1.5%. How this compared to a 30-year US government bond yield of 2%. So in fact, for similar rated international corporates, the funding cost to issue an international bond in Taiwan is still cheaper than those bonds to be issued globally. I think this is one of the key reasons for international bonds booming in Taiwan. In addition to the reason that life insurance companies has been a very investors with a very strong demand. Another feature for the domestic bond market is very similar to the Tokyo market. The ESG related bond has gained popularity in recent few years. We can see the growth momentum has been very strong. In year 2020 and 20, the regulators set aside a new guideline for sustainable bonds. So you can see that, in fact, in the first half of 2021, the total issuance of the ESG related bonds already exceed the full year issuance amount in last year. And sustainability bonds has dominated the total issuance. The reason for that is because per the regulators guideline, the sustainable bonds has much more flexibility because the proceeds of the sustainable bond raised can be used either in green, in social. So this provides incentive for the international players as well as domestic banks to issue sustainable bonds with a better flexibility because the proceeds for green usage is not unlimited in Taiwan. So if we take a closer look at those sustainable bond issuers in Taiwan, we can see that it is relatively diversified, including domestic FI, domestic corporates, as well as foreign sovereign and even foreign FI. And the tenor is also quite diversified from 5 years to 32 years. Currently, we observe the coupon rate for this sustainability bond is very similar to those straight bonds. And we expect this could change when the local market gradually welcome more and more this sustainable principal investments. We believe this will change considering the initiative and expectation from the government. So here is just to demonstrate the local bond market. The trading volume has been very stagnant. It is very difficult to imagine, in the past 10 years, the transaction volume of the domestic bond market actually decreased compared with 10 years ago. And very similar to Japan, government bond is still the key transaction balance while the corporate bond and FI debentures, the transaction volume is limited. Why is that? I think very similar to Japan. We contribute this to the heavy reliance on the indirect financing. If you see the new lending rate in Taiwan here, it's been very low. This provides corporates a much more incentive to finance their working capital or capex needs to go for the banks with either short-term capital or long-term loan versus the cost they need to pay to issue domestic bonds. So here, the direct financing rate in Taiwan is less than 20% in year 2021. I think, Masuda-san earlier mentioned, the bond finance is only, about 11 to 30% in Japan, over 30% in US. In Taiwan, direct financing, don't forget, this includes both equity and bond, and most of them are equities. So if we're talking about bond financing, I think it accounts for less than 5% for the total capital market. So I think this demonstrates a very serious situation in the Taiwan's bond market. It needs regulators to provide incentive to promote the bond market in Taiwan. Lastly, we want to also cover the issue ratings status in Taiwan. Historically, every issuance needs to have an issue ratings. However, the regulator removed the needs for corporate bonds to have the issue ratings in year 2013, and further removed the needs for financial debenture in year 2015. The investors actually then can use the issuer ratings of these issues as the proxy ratings to classify real risk charges in terms of the capital measurements. This actually, provide incentive for most of the issuers to issue the new bonds without requesting issue ratings. Until now, we can see only very limited issuance request issue ratings, and this has been concentrated in very selective corporates in Taiwan. We believe this could provide some, potential issues because, particularly in the subordinate debt, the credit chance of a subordinate debt is much different from the issuer's issuer credit ratings. So we believe this will be the situation that, try to promote the issue ratings will make the local bond market is more healthy and more, well established. I think with that, that concludes my part of the presentation, and I will handle it back to Grace.
Thank you, Mr. Andy Chang. We are now going to turn to the questions submitted from the audience. I would like to remind the audience that you can submit your questions anytime throughout this session via the Q&A box. Now, let me see what questions we got from the audience. I got some questions with me. I would like to ask Mr. Masuda first. Because of the limited time, you do have much chance to talk too much about the green market operation. We believe that the central bank has decided to introduce the green market operation. And what impact will this green monetary policy extend to the financial market in Japan?
Okay, thank you very much. These questions. Thank you very much. And it's just announced. So we'd like to see that what market perception is evolving. But definitely that is received as a good news because it's a sign that the central bank is going to buy. So from an issuer's point of view, arranger's point of view, they are more than willing to arrange additional bonds. That is the incentive. Right now, we are talking about a grenium. That's a premium of a bond price. And also, there is a certain possibility of investment and policies of those investors. But definitely, this sort of green monetary policy will facilitate of the market formulations from a viewpoint of the market participants and from the viewpoint of more demands exist. That's clear signal is sent to the Japanese market participants. And that's my interpretation. Thank you.
Thank you. Now let me ask Mr. Andy Chang. The green bonds used to dominate the broader sense of ESG bond market in Taiwan. However, you have mentioned that they were suddenly overtaken by sustainable bonds because of their flexibility. The question is that what do you expect the future trend for the green bonds in Taiwan?
Okay, thank you, Grace. Yeah, I think for certain corporates, they will still have an incentive to issue the green bond in Taiwan, particularly those with the high potential pollution concerns. For example, some electronic firms like Thai Power, they still have incentive to issue the green bond. For some FIs, considering the ESG initiative, they also have incentive to issue green bonds. The reason that, despite the demands, we believe the portion of the green bond will still be much less than the sustainable bond is simply because sustainable bond has much more flexibility, given the proceeds of the sustainable bond can be used in green projects as well. So for corporates, they definitely want to welcome more flexibility when they raise the funds. So I believe the green bond issuance will still see some market momentum, but it will not be as huge as before. Thank you.
Thank you, Andy. Please remind it to submit your question via the Q&A box. We don't have the facility to allow people to ask the question directly to the speakers. We are sorry for that. Okay, I got another question for Mr. Masuda. What the benefits, which include the markup, tax benefit, duration, etc., the issuer is availing or the regulator is providing to green bonds, social bonds, or sustainable bonds over normal corporate bonds? Further, is there any gender bond issue ever in Japan? If yes, please share the salient features.
Okay, thank you very much for these questions. In the past, ESG issue is a kind of negative checklist. Does this corporate making air pollutions? Does this corporate engage in kind of a child and labors? This sort of negative checklist was a past issue of ESG. But right now, ESG, it's not a simple negative checklist. It's a kind of positive towards of challenge of those period, new innovations challenge like hydrogen. It's a kind of engines and without making emissions. How to create of this sort of engines and how to deliver those infrastructure of hydrogens. So those tackling to the ESG is a positive signal of the company. So from this angle, if one company is not paying attention to the ESG issue, this non-payment itself is making a risk. So in that sense, and also that the ESG bonds is a symbol that this company is tackling rightly addressed to those new challenge. This is a perception. And there was a sea change from last year, this negative evaluation to the positive magnitude of those. And so in that sense, green bonds, sustainable bonds is sign of challenge. And the sign of this company is addressing to the right issues. So this is a kind of a very symbolic meaning of sustainable financing. And is any tax incentive? And there is slight subsidy, like evaluations and expense is subsidized by Ministry of Economy. And the METI is making a kind of slight subsidy to kind of transition financing. Of course, and there is some incentive is provided by the Japanese government. But more important one is those the positive signal sent by to the market. Is making a more important incentive for issuers. That is the current situation, and that change is observed since last year. That is my observations. And for gender bonds, and yes, gender is a very important subject, even compared to the Taiwan and Japanese ladies, and is not a kind of a social standing is sufficient in comparison with their capacity. In the Olympic game, and the Japanese women is better than Japanese men. Like a basketball or the NBA player, the female, or the male is a little bit failing, but female team of basket is a silver medal. So I think the Japanese ladies is more competitive, but than men in Japan. But nevertheless, there's a glass ceiling regarding to promotions and the wage equalities, employment opportunities, and the kind of domestic supports to those child. And that's according to the kind of a problem of small child numbers. And so as a official policy to support the Japanese growth, we supporting to those female participations in the labor forces. That is very important. But to my knowledge, and those gender bonds, ADB is just recently issued gender bonds. And the Japanese investor is investing to those ADB bonds. And also I myself is involved in Inter-American Development Bank, Multilateral Development Bank, support to the Brazilian bonds. And I supported, I personally involved to evaluation of this sort of thing. But to my knowledge, then so far, those social bonds is still a little bit discussions regarding to those social bonds taxonomy is about to the emerging. So in that sense, explicit issuance by Japanese issuer to the gender bonds it is so far limited. So compared to that, then the social financing to elderly people, elderly care facility is now flourishing, partly because Japan is now aging society. So that's my observations. But for sure that this gender issue is important. In the Tokyo Stock Exchange, Nadeshiko designated post. That means the certain criteria like ratio of the executive or female executive is a kind of qualification of this Nadeshiko. Nadeshiko is the name of flower. It's a kind of post verification that this company is adequately addressing to the gender issue. So this sort of designation of the stock exchange is observed. And so far, gender bond issue itself is very limited. That is my observation. Thank you.
Thank you, Matsuda-san. Now I got another question for Andy. Can an African, Zambia is in particular, can an African participate in Taiwan's capital markets? What are the requirements and what are the benefits?
Okay, thank you for the questions. I think, yes, anyone who fit the qualification, can issue the international bond in Taiwan. I think based on the regulation, the regulator will set aside a minimum credit rating requirements. So as long as you fit into the credit rating requirement, usually the investment grade, you can issue an international bond in Taiwan. The benefits for a corporate or for even a sovereign to issue international bond in Taiwan is in two key parts. First of all, I think the issuing cost here is relatively lower with the more incentive in terms of the funding cost. Secondly, I think the domestic investors has a very steady demand. This is not a volatile. This is a sticky, steady demand on international bonds. So I think it also build very long-term relationship between with the investors. So I think these are the two key benefits to issue international bond in Taiwan. Thank you, Grace.
Thank you, Andy. I got another question for Matsuda-san. you have explained that the Japanese government is considering to abolish the firewall regulation between banks and the security companies. Can we expect some more collaborations between banks and the affiliate security companies will be materialized in the near future?
Okay, thank you very much for these questions. I haven't explained in very details, and the collaboration between banks and the security houses for individual customer is already taking place. There is a certain branch, like a security house has a certain consultation booth within a bank branch that is already exist. Problem is a corporate business, like a large corporate and SME business. And so far, this year, that there was a certain discussions, and a little bit disappointing to hear is Japanese authorities quite conservative that they are taking measures for large corporation only. So like a consultation between the security house and the bank, like a common strategy, cross-listing or cross maybe personal or to the making kind of recommendations will be fast and materialize for large corporations. And for smaller corporations, and still this sort of regulation dominates, partly because they are a little bit concerned if you are coordinate with affiliated security house. If you are a banker, bank influence is too strong. So those dominance is occurred. And there is another concern is a kind of conflict of interest. Like if you lend the money by issuing the bonds and repaying to the bank, and that is causing kind of unnecessary competitions or like not desirable result regarding to relationship between the bank and the security business. So this sort of things, abuse of dominant positions, and also that conflict of interest consideration is Japanese authority is gradually and cautiously approach taking a step. That is the current situation. So in that sense, for large corporations, yes, we can expect, and maybe collaborations, synergy will be observed. Thank you.
Thank you, Matsuda-san. I got another question for Andy. You mentioned that the proxy rating is unique in Taiwan. And we would like to know what's the impact on Taiwan's capital market by using this kind of proxy rating?
I think the impact will be in various aspects. First of all, I think, from the issuer's point of view, as we observed in the earlier slide I just shared, this provides a limited incentive for any issuer to secure issue ratings, given the regulator allow proxy ratings. On the other part, from the investment point of view, I think, to be frank, they believe they are quite familiar with those issuers. So they believe to use the issuer rating as a proxy can be more efficient. However, I think the key concern is that for certain instruments, the proxy rating could distort the creditworthiness of the specific issue, because each issue has its subordinations in specific terms. Using issuer credit ratings may not fully capture the potential default risk of that specific issues. So we believe that no matter in terms of the issuers or investors' point of view, this will stop the further development or to establish a very well-structured bond market in Taiwan. Back to you, Grace.
Thank you, Andy. We will have the last questions, okay? This is for Matsuda-san. During the pandemic, the banking sector regulator in Japan issue any forbearance policy or any monitoring support to address the problems arising from COVID pandemic?
Apparently, there are many small corporations has trouble, particularly for engaging to those restaurant business and the sightseeing. And there is a certain measures, and our government didn't take any kind of lockdown measures in order to prevent of the further expansion of those infections. They are requested to close down, particularly for after the 8th. And also they are requested to refrain to the providing to the liquors to the night times. Instead, and the government is supposed to making a compensation of this sort of measures. So in that sense, prime responsibility now sitting onto the those and the fiscal measures to support those and the pandemic prevention measures. That is the prime responsibility. But meanwhile, and we didn't apply any moratorium as happened to the many countries. And instead, and maybe there is a certain guidance from financial FSA, financial service authorities, and to making kind of maybe restructuring for one by ones, not apply to the strict measures to making kind of those loan classifications. So those are maybe current situations. As a result, number of bankruptcy is lower than any other regular years, even regular years. And also great financial shocks, which was recorded 2008. So in that sense, and the bankruptcy is a control. So that the bank lending, the non-performing loans is not visibly increasing. And then nonetheless, that the bank liquidity is now very strong as a result of those, and the subsidy money is sitting aside. And also that the bank has a finding about the very limited opportunity to increasing lending. So in that sense, by using those liquidity, and also with using kind of guarantee supported by the Japan financing corporations and the guarantee associations, which I mentioned. And those banks is supporting to the SMEs by using those facilities. That is the current situation. Thank you.
Thank you, Matsuda-san. I got another question. So this will be really a final one.
Thank you.
This question is for both, okay? ESG is a hot topic recently. Would you please comment on ESG debts in Japan and Taiwan markets? I think we let Andy go first.
Sure, Grace. I think the ESG bond debt in Taiwan is experiencing different stages. Initially, the ESG debt in Taiwan is in the simple form of the green bond. And the government has a very specified guideline regarding what is qualified as the green bond and encourage the domestic corporates and banks to issue green bonds. So I think this is the stage one. After 2-3 years, I think ESG becomes an initiative globally. Then this brings more and more issuers to issue sustainable bonds in Taiwan, not only the green bonds. And the issuers also gradually expand from the domestic corporate and FI to international participants. So I think, right now, in terms of the growth momentum, the ESG debt in Taiwan is showing a very high growth rate due to the low foundation. And we expect this continue to increase very strongly in the coming few years. In terms of the content and, surveillance mechanisms of this ESG debt, it is also quite established because issuers need to disclose the use of the proceeds on annual basis in the public domain. So we believe this will help to establish a well-structured ESG debt market in Taiwan, following the popular and welcome globally in coming few years. Thank you.
Thank you, Andy. Matsuda-san.
Thank you very much for these questions. And I can answer from two different angles and from those and the developments. One is a little bit in the macro perspective regarding to progress of those and the emission reduction target. Last year October, that the Japanese government announced that the carbon neutral society will be realized by 2050. This announcement is clearly declared by the Prime Minister Suga. And also that under this April, when that the United States government step up their reduction target from 25% to the 45%, and for 2030, the Japanese government follow this reduction target upgrade to the 46% by 2030. And this one is received as a kind of sudden increase, and everybody is upset. And how 25% is very, very difficult, but how government is step up to the 45? But if you follow to those IPCC just recently issued 6 and reporting, and the 45% target of 2030 is fit to the 1.5 degree increase scenario. So previously Paris agreements is saying to the 2 degrees is sufficient to the kind of control. But if you want to follow the policy to the 2 degrees, that will to the maybe 3 degrees increase of temperature by the end of this century. So that's insufficient. And concludes to the upgrade to the reduction, particularly for first 10 years is very important. And then now upgrade to the 45%. And everybody upset. If 40% is attained, maybe half of the electricity should be renewal. And also maybe has to cut down to the those electricity supply. Maybe nuclear power plants should be mobilized instead of those politically very contentious issues. So in that sense, now everybody is now gradually understanding the reality, the target and difficulty to attain 45% by 2030. So in that sense, we are process of catching up to those moving goalposts. Now that the 2030 45% reduction is a very, very important. And then this is a kind of, and also in that sense, all the company of Japan and have to deal with these issues somehow, or that their supply chains, their energy supplies is also subject to this sort of change. So in order to making this sort of fundamental transition finance is necessary. Then that maybe if you are tagging to the green bonds, sustainable linked bond, any sort of formality of scheme of social financing, maybe funding necessary to attain this under 45. That is the current situation. So in that sense, everybody in Japan have to deal with this issue. This is a kind of sea change which we observe this year. From a second viewpoint, maybe diversification is now progressing. That is my presentation points. And the green bonds, sustainable bonds is now expanding to those sustainability link bonds, which is not earmarked for all those loan proceeds to the one specific. Otherwise, green bonds tend to be solar and wind power generations. And so shipbuilding company or ship transportation company, the ion company cannot do anything. So now we have to think about how deal with those high emission industries. And now we are focusing to the climate transition finance. Last December, ICMA issued Climate Transition Financing Handbook. And the Japanese government is now trying to deliver to the mapping. Mapping means how can we deliver to the kind of new generation technology, which is environmentally friendly and which will attain to those carbon-free target of 2050. So this transition finance is now focus, and we are involving of how to deliver of transition finance, climate transition finance. And some of the European investor doesn't like this idea of transition finance. They may consider it's a kind of brown, or maybe a mixture between brown and green, that is olive or something like that. And it's a kind of color metaphor. So in that sense, and to what extent these transitions, like our first sample is financing to those and the LNG ship conversion of the fuel of maritime transportation from bunker oil to the LNG. Maybe emission of the CO2 is very half. But it will take time to deliver hydrogen fueled ship. So this sort of transition financing modality and how to deliver mapping, that's maybe related to the vision of industrial transformation. So this is maybe a real agenda to the green financing for next step. So I think this is a year of transition. Thank you.
Thank you, Matsuda-san. This brings us to the end of this webinar. We hope that you have enjoyed it and the content has been relevant, insightful, and ultimately valuable for you. Thank you to our speakers and to you, our audience, for your time and attention. You will receive an email notification with the replay link and the PowerPoint handouts, as well as the key takeaway of today's presentation from ACRAA separately. Thank you all again, and goodbye.
Thank you, Grace. Andy.
Thank you.
Bye-bye.
Bye-bye.
Thank you, Matsuda-san, Grace. Goodbye.